What happens to sterling if the UK votes to leave the EU at the June referendum? Last June, a euro bought you about 70p. Today it's worth 77p. And one bank is now predicting that if Brexit does indeed happen, sterling would crash to one-for-one parity with the euro. That bank is UBS, and with me is John Wraith, strategist at UBS. John, your assumptions are more bearish than other banks. Why is that?
They are somewhat. I think most people expect that sterling would suffer significantly if the UK did vote to leave the EU in June, as you say. We've already seen a big weakening of sterling over the past few months. We don't think that's merited by economic fundamentals, and therefore it tells us to a degree that there is some serious investor concern out there. If the UK votes to leave, therefore, we think you could see an acceleration in the pace of losses in sterling. Let's have a look at our first chart and see that one-for-one parity.
It's important to point out that you actually think that there's only a 40% chance of Brexit.
Yeah, I mean, that's the probability we attach to it based on what the polls are telling us, some financial market valuations and so on. That said, there is still nearly 4 months to go. There's a lot of uncertainty about the way that this may move, and we may see the polls react to events that at the moment perhaps are unforeseeable.
Our second chart and our third chart shows actually how different parts of the financial market world are responding. So first of all, for example, the credit markets. What's the fear here?
Well, essentially, these are the credit default swaps in the UK and Germany, and you can see over the past few months how rapidly the price has been rising in the UK. That's like an insurance premium, ultimately against sovereign debt default, but I don't think anyone's really expecting that. It's just effectively a low-cost way of protecting yourself as investors against the event the UK votes to leave the EU, and there is some concern about sovereign creditworthiness and the outlook for the economy, which is why we've moved more rapidly in this instance than Germany.
On the other hand, as our third chart shows, in the real world economy, it feels like there isn't that much of an impact. Purchasing managers comparing the UK, that red line at the top, with the US and the Eurozone, it feels like they're not that bothered at the moment.
Yeah, and when you look at this in context with the decline in sterling, as I said, that we've already seen over the past few months, it does tell you that there isn't a fundamental justification at the moment.
Not yet.
Yes. The UK has been performing over recent months better than, well, in this instance, the US and the Eurozone, other G7 advanced economies generally. But there is a danger between now and the vote that we start to see a loss of momentum. There's a lot of concern around about the referendum. We're starting to see signs of it in consumer confidence data, some of these forward-looking indicators. And if that were to start falling lower towards the sort of decline in other markets, we'd have bigger concerns.
A long way to go, as you say, up until June 23rd. How is sterling going to perform? How will it react to UK data, whether it's good or bad, to global economic issues, whether they're good or bad, or is it all about Brexit?
Well, it largely is. And as I say, although the data has been coming in as expected by and large in the UK, we have seen this near 10% depreciation in sterling on a trade-weighted basis. So if we were to see the data deteriorate, that would start to crystallise some of these concerns. We think there is further weakness ahead because the uncertainty is likely to grow rather than diminish over the next few months. And if the data falls away as well, then that deterioration could be fairly significant.
Can I conclude by asking you, would that therefore, could we call it a full-blown sterling crisis if we do leave the EU?
Well, the pace we're suggesting may happen in the second half of the year if the UK votes to leave and we get a very uncertain period, probably with economic slowing, is similar to the pace we saw in late 2008 following the collapse of Lehman's and the sort of full-blown financial crisis. Top to bottom, from sort of late last year to late this, it would be about a 25 to 30% depreciation. Very significant. Whether we call it a crisis or not, I guess, is up to individuals to decide, but it is a very significant move.
John, we wait to see it. Thank you very much. John Wraith from UBS.